We're going. Hey, good morning. This is Chris with Suarez Home and Finance, and you are on Coffee with Chris. It is, so far, it's an okay Monday. Been up since 4 o'clock with allergies. Yay me, yay Florida. Don't know if you saw us last week and you were, the alarm going off in the hotel. I was in Lake Tahoe doing training and doing a mastermind group with people like me. So that was crazy. So we're all good this morning. And I have Steve on the phone with me, on the call with me today. So Steve and I have worked together for probably, I would say, over 15 years, something like that, 12 to 15 years.
Yeah.
And so, so Steve is my go-to. And he is so I am a broker. If you didn't know that already, but you should know that by now. So I am a broker, and then I have my banks that I use. And so Steve is key to me in that if I need help getting a situation figured out, if I need to get a hold of an underwriter because we have an issue, whatever the case is, he is my go-to, and we are awesome together. So he is on this call with me this morning to talk to you about whoops, hold on a minute. Okay, we're still live. I just had a snafu come up. So he's going to talk to us this morning about what's called, I call them outside of the box loans. So in the legal world, in the legal technology, it's called non-QM, but it's kind of like a portfolio. But again, I call it an outside of the box deal. So Steve is with one of my lenders, and he is going to talk to us today, again, talking to us about different programs that we can do. And a lot of this is key because Florida is, Steve, do you even know like what's the percentage that Florida has of self-employed people?
Well, nationwide is about a third of the workforce is self-employed.
Yeah.
So
it's a lot.
Yeah, it's a lot of people.
Okay. So let's jump right in. So Steve gave us, we did 3 questions on what is asked the most. And so Steve, jump in and, based on between myself and other brokers that you deal with, what is the most common questions that you have?
Well, so if I'm self-employed and and I don't qualify using tax returns, can I get a mortgage? And absolutely. And so one of the great advantages of being a self-employed borrower is you get the advantage of being right off a lot of your income. Unfortunately, a lot of times your tax returns don't reflect your income, so you can't qualify using a traditional sense. Well, there's a lot of programs out there that we use is a bank statement program. You can use personal or business bank statements and use the business deposits to qualify. These loans do not require any tax returns, and basically we're qualifying you on your business deposits or your personal deposits too. So it can be 12 or 24 months. So that's that's a great way to go.
Which for me, so I'm self-employed. My husband and I have been self-employed for, I think Andy and I, for probably 27, 2022. So probably 26, 27 years now. And so that is key. And so there is so many people, which I know you see as well, that are self-employed and they have no idea as far as the things that you can write off, so on and so forth. And so that is, that actually can hurt you when you're buying a house if you don't write off certain things, like if you don't pay your car payment through the business and so on and so forth. And so that's where you really need to have a good accountant to help you with those things. And so that's where, whenever you're doing financing, if you paid for those things out of the business, then I can add that back into debt. But if we're doing what we're talking about now is a bank statement program, we're going to be going off of your bank statements, your deposits. And so that's a big deal, because I have a client that probably, I would say probably about 2 or 3 months ago showed like $100,000 loss on their tax return. And so in this instance, Steve, we wouldn't even need that because we're doing bank statements.
Correct.
Deposits. Okay.
And a lot of self-employed, a lot of people are late on filing their tax returns too. So these aren't needed. These tax returns aren't needed. So, you're basically based on a bank statement return. So they haven't filed their taxes last year. you still get them a loan based on their bank statements.
Okay. All right. And then, okay, so that's, that is key. And it's not that we're doing a lot of deals like whenever the market crashed. We're still looking at things a little bit differently than whenever the market crashed in 2008. And
Absolutely.
so this is not setting people up for failure. We're looking at it in a different manner. So it's not just, here's a hairdresser that makes, $200,000 or whatever a year, and there you go. Which some good, but it's not, we're looking at it in a different set of eyes these days than what at that time. Cause I know
Definitely verified.
That conversation has been up. Yeah. Okay. So, all right. So that's if we're doing a bank statement and we're using personal or business returns. So,
Correct.
we just closed one. I just closed one with you, Steve, just last week that we got through, had some issues and we switched it over. You guys got us done like within a week and a half closed. And that particular person was self-employed, but used only personal bank statements, did not actually open a business bank account. So, that's where we can use those also, even though that you don't do that. So, again, we need to just look at the whole thing and see what we can figure out. So 1099 borrower. So tell us about that.
Okay. So 1099 borrowers are your like truck drivers, your Uber drivers, your independent contractors. A lot of times they take advantage of being an independent contractor, and they write off a lot of their expenses also too. So what the nice thing about this program is we don't use tax returns at all. Only thing we're going to do is we take their W-2s. It could be one W-2, or you can have multiple W-2s, and we qualify them based on their 1099 income. So it's a excellent way for you're someone who's taking advantage of the tax codes and has W-2 income. It has 1099 income to qualify for a mortgage.
Okay. So just like what you said, truck driver, Uber. So they need to be doing this for 2 years though. We need to have the history of the 1099s.
We could do you could do less if they were like working for an employer that was a W-2 and they switch them to a 1099. We can do 1 year.
Yeah. Okay. All right.
But you definitely need the 1 year to qualify them, because you're going to use the 1099 income for qualifying because you're not using tax returns at all. You're basing their income just on their income they're receiving from their W-2s. From their 1099s.
Okay. But if they went from working at a grocery store, so let's just say locally as Publix. So if they're working at Publix and then they went to be an Uber driver 1 year ago, then we couldn't do that because they've only got a history of doing that type of job. So it's the field what matters.
Absolutely. Yes. Correct. 2 years of
okay
on that one.
Okay. Which again, there's people that have done that. Maybe they went from Lyft to Uber, or they went from, this truck driving company to this one or whatever. And we have seen that they're switched to a 1099 because maybe they're paying for all of their truck expenses and all that kind of stuff. So it's definitely something out there. And again, we're using the 1099s. We're not using the tax returns, and we're not using the bank statements.
Right. Correct. Yeah.
Okay.
Yeah, and a lot of brokers don't offer that. A lot of lenders and a lot of brokers don't offer these programs. These programs are, are not some don't offer it. They don't want to offer it. So it's a good way to qualify your 1099 and your self-employed borrowers.
Right. Yep. And we do everything. So that's sometimes it drives us mad, but we do everything. Okay, so the next thing that we've got is service industry. Okay, so this is where tip income. Okay, so tell us about this one.
Okay, so Florida. I live in Florida, so we live in Florida. It's a huge service industry too. So a lot of these folks are get a small salary or W-2 income, but most of their income is coming from tips. So if you have a borrower that is constantly putting their tip income in a bank statement in their personal bank statements, we can use their tip income. We get a 12-month or 24-month average of their tip deposits, and we can qualify them using their tip income. So it's a great way to support our local bartenders out there. help them get a loan.
Right. Okay. And that is, and so we can use the 1 year for the bank statements. And so we're using their hourly also. So we're going to use a W-2 and a bank statement.
Yep. No tax returns.
In order to use that.
Just their W-2s and their bank statement programs to calculate their tip income.
Okay. So let me just say this. So a lot of people do not deposit your tips. So if you do not deposit your tips, we cannot do this for you, because this is not that's where we would have to do a bank statement or something different, because you do not deposit those.
Correct. So, it's a high bid program. It's for the folks that deposit their tip money income on there too, because we have to verify. Remember, these aren't fog and mirror loans. These are verified loans. So I mean, we're verifying them on bank statements or 1099s or
somewhere somehow.
All verified. It's
right.
not the loans of the past. These loans are verified and qualified.
Right. Okay. Again, because that's where a lot of people's mindset is going to go. Well, wait a minute, then we're going to end up like we were before. No, because we are, yes, it is outside of the box than a conventional VA, FHA, all of that stuff. But we're still looking at it so that we don't have, and it's funny because we just had the electric company come out to the house, and it happened to actually be a past client of mine that was working for the electric company now. And so he was talking to Andy and, realized that, hey, I did the loan from, several years ago, whatever. And it's funny because, I mean, I'm talking about probably like 2009 or something. Young, got him into a house, got a county program and everything else. Steve, you guys did it. And he remembered and said specifically to Andy, yeah, she told me that she wasn't going to get me into a payment, that the payment was going to be so affordable that I could go and work at McDonald's and still make my payment. And it's funny because he remembered that after all of these years. And so, that's where the mindset is. We're not going to get people set up for failure and, and have have a market crash again like 2008 for those reasons. So we're definitely verifying things. Okay, so next one is assets. So tell me on that one.
Okay, so this program is for someone that basically they can't verify their income at all. They don't have a job, but they have plenty of assets. So if you have a lot of assets, if you have more than the loan amount in assets, so 401k, retirement accounts, stocks, bonds, we can qualify you based on your assets. So let's say you're a retired borrower and you have no job right now. You're retired. You've enjoyed, worked your whole life. You're retired. You have no income coming in. You have plenty of assets. We can qualify you just on those assets. You don't have to deplete all your assets to buy your home. You can qualify just on those assets. Or say you're moving in from another state and you don't have a job yet. But you have plenty of assets in your retirement accounts. You can get a loan qualifying just on those assets alone. And that's for your primary residence.
Okay, so but for those assets, they need to be in an account that can be liquidated if need be.
Yes and no. Yeah, we can do retirement accounts, which obviously it can be liquidated by emergencies. You can do stocks, bonds. You can even use Bitcoin. Bitcoin is discounted a little bit more because it's so volatile, but they're pretty flexible. They've shown that if a borrower is responsible enough to save enough money, they look at those, and that's how they're qualifying the borrower on those assets.
Okay, we just can't use your equity in your home for this because that's not considered that's an asset as far as your bottom line, your liabilities and assets and what your net worth and all that kind of stuff. And if you were selling it, but we cannot use that equity in a home because it's not liquid.
Correct.
And so that's, again, money market IRA, 401k, blah, 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 all of those things that you can make a phone call or send an email or whatever and say, hey, I need to cash in my account. Those are the things that we can use the assets for.
Absolutely. Yeah.
Okay. And again, credit and debt credit and debt is still reviewed and counted. We don't care about income because we're doing the calculations out, so on and so forth or whatever. So that's a very good thing if you've got that money that's sitting there and you don't want to deplete it. And so we can still do it. And right now with a lot of people paying cash, I've talked to several agents, and a lot of people are paying cash because they cashed in their retirement. And so, which we can also get you that money back with a different loan program that is not on this topic, but we can do that also if you did that. But with this asset program, you don't have to do that. And especially like with an IRA that you're penalized for taking it out.
Absolutely. You're leveraging your money. Yeah. Great way. Yeah. Give you a lot of choices.
Okay. Okay. So now let's talk about investor programs. So this is for you buying an investment property.
Okay. So if you have a seasoned investor who has experience of owning and managing rental properties, you can do what's called investor cash flow. So basically it's a no, we don't verify the income at all. The only thing we care about is the rent is higher than their mortgage payment plus the taxes and insurance. Long as the property cash flows, that's your only qualifying measure there. So it's a great way to get in to do to buy and cash out on investment properties too. So it's
Okay. So what that means is that, so whenever we're doing an investment property, so in most cases, we do what's called a rent schedule. A rent schedule is done by the appraiser. So the appraiser does the appraisal on the property, but they also do a second report that's called a rent schedule. They're saying, they're doing their research, so on and so forth or whatever, to say, okay, for this house, this many square feet, this area, blah, 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 they can get $2,000 a month in rent for this house. Then I'm looking at and saying, okay, your mortgage payment is $1,500, including taxes and insurance, everything out the door. So your cash flow is a positive $500 a month in cash flow. So therefore, we're not counting anything else against you. We're looking at, that's what we're countering the payment with. So then that makes you qualified. So that rent schedule has to be the same or more of your total payment, including the taxes and insurance. Okay, so no tax returns.
No income.
No income. Okay, no debt. That is if you're seasoned.
Right, correct.
Okay, right. Okay. So a seasoned, again, which I think you said part of it or all of it or whatever, is primary residence plus a history of one out of the past 3 years, right?
Yeah, owning and managing investment properties, correct. And there are exceptions. I mean, all these programs, they have exceptions too. So if you have a borrower that has a super high credit score, and then we lower the LTV, and maybe they don't have an investment history, or maybe the rent schedule is a little bit low. There are exceptions on these programs too. So they're pretty flexible on these.
Okay. And you just said something that that most people don't know what it means. So LTV means loan to value. So that means your down payment versus the purchase price. So your loan, which is if you're putting 20% down. So if you're buying a house, just for easy numbers, if you're buying a house for $100,000, that is your value, because the value has to come in at least at the $100,000. Your loan, if you're putting 20% down, would be $80,000. So that is your loan to value, 80,000 to 100,000. So you're putting 20% down. So that's where we get, an 80% loan, 90% loan, whatever it is, but that's what loan to value means. Okay. And so, all right, normally 1 out of the last 3 years, but we can use a lease or a CPA letter in most cases. Again, just like what you had just said, is that, there's exceptions. So it's just a matter of looking at the whole scenario and see what the best way to go is.
And this is a $3 trillion marketplace for the investment properties. And so that's a lot of loans, a lot of real estate for realtors out there. So it's a great problem, great tool to have in your toolbox.
Now, is that just Florida?
No, you can do it. We can do it in 50 states.
Well, no, the 3 trillion.
Oh no, that's for the whole United States. Yeah.
Okay. So it's a $3 trillion market nationwide.
Yeah.
Is that right? Okay.
Single family investment properties. Yes, that's approximately about $3 trillion marketplace.
Okay, gotcha. Okay. Okay. And then did we say if the scores were 700 or whatever and about 30% down, for instance, we may not need a rent schedule?
Correct. Well, if like 720, 70% down, the rent schedule's not even looked at. So if the rent
30% down.
Too, yes, correct.
Okay. All right. So 30% down, which would be a 70% loan to value.
70% loan to
in
value,
that instance,
correct.
just like we talked about.
Mm-hmm.
Okay, perfect. Okay, so the other thing is that so those are that's the majority of, again, what I call outside the box loans. And so you have to work outside of the box in doing this, even whenever the market is normal. It doesn't matter. You still have to work outside of the box because there's so many people that are self-employed. You know, you have to just think outside the box, and a lot of people don't do that. A lot of places that you call, and they are they're in a call center. They're not going to look at these different things, and they're going to just be the cut and dry guidelines. So that's the difference of if you're using a broker versus going to a bank also. And a lot of these other companies is that they have their set of rules, and that's it. So this is where dealing with a broker like myself is that you have these other options also, so that, you know, you can take care of, you know, your client no matter which way they go. And that's where having somebody like Steve is key to me, because I always have that in the background to, you know, to take care of my clients with. So the other thing is that so people that have no scores. So if you have a no credit score, that's usually meaning that you've lived off grid for a lot of years, or at least, you know, 3 probably minimum years, or you are what I call a fresh baby. So that means that you know, you're just 18, you have no credit, so on and so forth. So Steve and I have done these before. We can do no credit scores on all loan types. We can do it even on conventional. I think we've done before, haven't we, Steve?
Absolutely. Yeah.
Yeah, I thought so too. Yeah, it's been a little bit, but we've done it on all. So FHA, VA, USDA, and conventional with no scores. So again, even if you've got that, you know, 18-year-old that it makes more sense to buy a house than rent, and, you know, if the parents needed a cosign, but they don't have to, if they've got a job, so on and so forth, then it's totally possible to do. Steve, based on what you said, 80 to 90% of lenders don't even do these. Don't even do no scores.
Yeah, they don't want to bother with them. I don't know if they don't want to bother with them, or they, you know, they're more difficult, or, you know, or they don't want to do it. So, you know, more business for us, I guess.
Right. Well, and it is a little bit more work because we need rent history or housing history. Sometimes we can do them even if we don't have housing history, because I know we've done that as well. Sure. But we need what's called non-traditional trade lines, meaning, and it's funny because Steve and I have gotten creative through the years as far as what is considered non-traditional trade. So we've even used something as silly as Netflix. You paid Netflix every single month on time. It was on auto pay, whatever, which most of them are. And that's considered a non-traditional trade line. And so again, that's where, you know, I haven't seen it or had to do it in a little bit. Totally, absolutely easy enough to do. But that's where we're taking the bank statement and looking, because I've had clients in the past will say, I don't know, I don't have anything that I pay monthly. And I'll say, okay, give me your bank statements. Let me look through it. And so I'm looking through the bank statement. And then, you know, if I've got 2 bank statements, then you can kind of see, you know, what you're normally paying every single month, you know, childcare, Netflix. I've even used, oh God, what was it? Like a Taekwondo, I think we've used in the past.
Gym membership.
Yeah. Gym membership. And, you know, you're paying, I want to say that I had one that it was grandparents taking care of the grandchild and sent them to go take karate lessons, Taekwondo, whatever it was, every single month. And we actually use that because we got a history of it. So, I mean, you know, it's anything can be possible. Just depends on, you know, and sometimes it can be, what is a word that I'm trying to think of? Cumbersome to get me the paperwork. But what's your option? You have a house and do a little bit more paperwork, or you do no paperwork because it's too cumbersome and you don't have a house. So, kind of weigh out your options.
These are some of the most rewarding loans that I do as the no scores. I mean, these people are, a lot of them are, most of them are very worthy of the house and they need it and they're stressed out. And most people, they've been hearing no from other people saying I can't do it. I have no credit score, click, and they're calling the next person and trying to get a loan.
Right.
So, they're very, very, very happy and very grateful that, they find someone that can do it for them. Because, making home ownership that's what our job is. We make dreams come true.
Yep. Well, was it June that was home ownership month? I think it was June. I think it was June. It's on my calendar somewhere, but I think June was home ownership month.
Every month is home ownership month.
Yeah. Well, yeah, absolutely. And, and again, this is where that I have key people like Steve in the background, helping me and my staff, to do whatever we've done, down payment assistance. And, with Steve and I, we've been working together for so long, and with underwriters and so on and so forth, to where, I will go to, if I'm looking at another bank for some reason or whatever, which has got to be a really good reason if I'm not going to Steve. But if I'm looking at somebody else, that I'm having to start over again with teaching an underwriter about DPA, about down payment assistance and this and this and this and renovations and things like that. Steve and I have been, that's where that, if I can do it, that's where, and I'm kind of hesitant about saying it, but if it can be done, we can get it done. And it's because we look outside the box. We look at, every single thing that there is to look at in order to see what can be done. So, if you're a real estate agent, hopefully, this information helped you, whether it's your investors, whether it's your buyers, whatever. If you are a buyer looking to buy, if you have family or friends that are looking to buy, hopefully this gives you enough information. This is all going to be on YouTube, social media, all that kind of stuff, whatever, just like it always has been. And, don't hesitate to call. Nothing is a dumb question. And, if there's something that you're not sure of, hey, is this going to work? Is that going to work? We don't know until we look at it. So, and it is not something sometimes, and all the time, whenever you're having self-employed, which I've done a podcast on this in the past, self-employed, I think it was the pre-approval one. It is not cut and dry that, here it is right now, and I can get you an answer in 30 minutes. I've got to have the documentation in order to see what we can do in order to make the best, the biggest bang for your buck, the most financial sense, all of the above. And Steve is key in that instance, in those things, to try to get you figured out whenever it's just not a normal deal. Even in those normal deals, they're not normal anymore. There is no normal. But hopefully you found this interesting, intriguing, educational, whatever word you want to use. So this is, again, going to be posted everywhere, and so that you've got access to it. If you have any questions, do not hesitate to reach out to my office. And thanks for being on here, Steve, with me. You're always there, and I so appreciate you.
Thank you for being such a great lending partner.
All right. I'll talk to you. I'll probably talk to you here shortly on a deal.
Okay. Take care.
See you later. All right, bye.